Today is Monday, January 27th, 2020, and I am Julie Hankinson with my thoughts and opinions on the coronavirus and Jim Cramer's virus outbreak recommendations. Historically, the S&P has recovered losses from an epidemic approximately 6 months after the peak of the event. In 2003, 6 months after the SARS epidemic, the S&P was up 15%. In 2006, 6 months after the avian flu epidemic, the S&P was up almost 12%. And in 2014, 6 months after the Ebola epidemic, the S&P was up almost 5%. Now, in Jim Cramer's videos last week, he stated that the coronavirus could dominate next week's market action and that this would lead to buying opportunities. He also said that investors are currently too cavalier about this epidemic and the market wants answers. Now, today, with the current death rate at 80 deaths in China and over 3,000 confirmed cases, I just can't help but agree with this assessment, as the market barely factored in a 1% blip Friday on news of more deaths in China and the 3 confirmed cases in the U.S. The fact that a Chinese official stated the spread has accelerated and they have placed more cities under quarantine has not yet been factored into our U.S. stock market, despite the fact that numerous U.S. companies have exposure to what is currently happening in China. The SARS epidemic heavily impacted transportation, retail, and restaurants, and that was back in 2003. As our global economy has expanded massively since 2003, we can expect a seriously large increase in the impact, not only to tourism and oil prices, but restaurants and entertainment, and of course the auto industry as well, as Wuhan is a key center for auto and car parts manufacturing. I anticipate that the market will pay more attention to the coronavirus death count and to its continued aggressive spread during the upcoming weeks. And yes, I agree with Cramer that this may eclipse earnings week and cause the market to dip further. But would I say this is a good time to buy stocks? Definitely not. I believe we are currently only in the beginning stages of this epidemic, and whether 2020 is a bad year, the stock market, because virus or because of the market, is currently overvalued and ripe for correction, I do believe that stocks will dip further, and then you have your chance to buy them at a discount. Again, these are my opinions, and ultimately you are responsible for how you handle your stock portfolio. Please remember to stock up your pantries with food staples in case your location where you live is hard hit by this virus and you need to avoid potential exposure. And if the virus passes your location by, well, then you will have food to eat later while enjoying peace of mind now. Stay safe, and please hit the like button and subscribe to stay updated on the latest information. Thank you.